Now, the last piece I wanted to talk about is dollar cost averaging. Really, it's just putting money away consistently every single month. And it could be every single month. It could be every 2 weeks. It could be every week. You know, you got a fixed dollar amount. You're putting into the investment at regular intervals. And this makes a big difference because, you know, from day to day, the stock market, the investment market can be up and down day to day. It's always going up and down. Now, generally, long term, it's always going up. It's always moving up. But to the daily, there's highs and lowers. And so when you put money in every month or every 2 weeks, I like doing every week, you're capturing, you're buying stuff a little bit higher, you're buying stuff a little bit lower, you're buying stuff a little bit higher, lower, higher. And it just smoothens out that ride. Instead of you buying a big chunk and just, hey, this is where it's at and whatever happens, happens, you can smoothen out that ride, those ups and downs by buying when things are higher and when things are lower. You can take advantage of that. You see, the key to making money in the stock market is not getting scared out of them. I think it was actually Peter Lynch mentioned that. And yeah, as soon as you get scared out of them, then you miss those opportunities. So the example I want to show you is that, say for an example, you had $12,000 to invest, okay? So you invest it all at once. And if the stock market crashes the next week, because we don't know what's going to happen, you put your investment in. Could go up, could go down, we don't know. But if you put that 12 grand in and the market went down, you're going to take a hit. But if you invest, instead of 12 grand all at once, you invest $1,000 a month. Even if your first $1,000 went in, the next day the market went down, the next time you put that $1,000 in, it's going to be a lower amount. So you're starting to smoothen that out and it starts coming back and you buy at those different intervals. So you're able to smoothen out your investment ride by averaging out your cost per share. You know, maybe another time we can get into a bit more about that. But like using the dollar cost averaging, putting money away at consistent intervals, a set dollar amount, consistent intervals. You don't have to worry about trying to time the market. Was this the right time to get in? Like, it's the biggest piece. It's like, you know, when's the right time to invest? Well, probably 10 years ago would have been probably the best time to invest, getting something going. The next best time is today. Let's just get started today. Whatever's going to happen. Let's start putting some money in. And then it comes down to what's going to be the most tax efficient for you. Should you be using an RRSP or a tax-free savings account? Should you be using the first home savings account? You know, then you can look at those different strategies. But getting started and putting money away makes a massive difference. So I hope when you start getting investing, you guys get started investing. If you aren't investing, you start. If you are already investing, you start a monthly investment. If you've already got a monthly investment or bi-weekly investment or however you're doing that, you increase it a little bit, or you give yourself a tap on the back saying, good job. We're following the steps. Whether it's, you know, discipline, just staying invested. I know things are all over the place. Seems like every few months something's going on. You know, having everything diversified so you're not having to have all your eggs in one basket or relying on one sector. I hope this takes off. I hope this takes off. You're going to be okay because you're spread to different areas. And the third is just dollar cost averaging, putting that money away every single couple weeks, every single paycheck. And using those three strategies, they're simple, but they give powerful results. I know it seems like, oh, it's not a big deal. No, this stuff adds up. I've now been investing for over 15 years, and it's been working for me. If I keep doing what I'm doing, put money away every week, from now, no problem. I'll be able to retire early if I want to. Probably not going to, but you know, I'm in a position to retire early. Don't have to worry about that just because I followed a lot of these simple little plans and little strategies for just winning the financial game, winning the money game. But thanks for watching. If you found this helpful, let me know. If you have any questions, feel free to reach out. Hope you guys have a great day. Talk soon.